All right, everybody, hold on one second. We're going to get started in just a moment. Just want to let some more people get on right now, and we'll get started live in just a moment. I see some questions already in. If you have some more questions, go ahead and send a question in. I would ask that when you're sending a question, please add the host and presenter to who you're sending it to so that both Todd and Adam are able to see the question. If you have anything else that you need, or if you'd like some more support, you can always use the chat feature also. That shouldn't be a problem as well. So hold on, everybody, and let me get Adam live on the line.
One question, JJ. I see Adam logging in, so. Oh, he just slipped out, so we are recording, so there'll be some, when you go back and re-listen, if you need to, you'll have some extra things to hear me talking, and so again, if you have questions, send them into the host and the presenter, please, so we can both see them. And just for those that are going to listen to this recording, we're a little long before we get started, so just keep that in mind that it's going to start momentarily. So, how do you get permission? Chat or Q&A, either one is fine.
I don't. Okay, it's recording. What's going on, everybody? Recording. Okay. Sorry.
Hi, Adam.
What's up, Todd? All right. Crazy turnout today. Let me just look at here. Okay. So we have some questions coming in, and no question will go unanswered, just so you know. So we appreciate that. And the question from Tom is, do we send it into chat or Q&A? Chat or Q&A. Just make sure you send it to, if you're choosing Q&A, just send it to host and presenter so Todd and I both can get answers to the questions. Okay. The reason for this call, this is not our normal call. Our normal call is Thursday at 2:30 Eastern. But the reason why we're doing this call is because it's really been so successful, the service, that the only reason that you wouldn't be having success if you were following it is if you weren't doing it, which would mean you didn't understand it. Here, as you see, is the track record since inception. And I started doing it a little bit before August. And when we first came on, we were doing smaller number of contracts, less trades each week. When you see these numbers, 2 and 3%.
Are you sharing your screen? Because I don't see it.
Good call.
Share your application or your screen.
No, I know. Thank you. I have to share Safari. That should do it.
There you go.
All right, thanks, Todd. I had it and then I stopped it.
I know.
All right.
I saw.
All right. And where? Okay. Sorry. Okay. Just 1 second, and then we'll get started again.
Sorry. So I have the questions in the chat. When I went to sharing, real quick, I just want to make sure that everyone, the Q&A questions too, I saw Stephanie right in. Where are those? There we go. That's perfect. All right, got it. All right, so this is a track record from the beginning. When you see 2% for Verizon, 3% for Duke, usually that means we ended up owning the stock. Microsoft, 75%, it means we took the trade off. Maybe it was earnings or something. So this minus 3% in Potash would be a negative trade. CSIQ, we took the trade off. And so the worst trade was United States Steel. We lost 6.5%. So that was the worst trade we made. Again, I started before August. We started here. It was smaller trades. And then we started upping the contract size a little bit and making some more trades. And this track record is like the prettiest thing you see. Like SLW, Todd will bring up his track record later. We own from 21 and change. It's above 25. LNG we sold actually. We need to update this one because we sold that at 48. I didn't even look. I don't even know if I want to look to see what it was. We were long. Todd, what price were we long LNG from?
41.50.
And we sold it at 48. So we're not perfect because it's at 50. But this track record right now we're averaging what would be over $300 a week, a little over $140 per trade that we do. So the main thing we want to make sure in doing this call is that everybody who's doing it understands what we're doing. So here's my strategy. I hope you guys think it's good. I'm going to show you how I do my trades on the Fidelity trading screen. Okay? I'm going to show you how I do my trades on Fidelity trading screen. And I'm going to switch to Todd a little after that. He's going to show you the strategy on Options Monster and Thinkorswim. So you're going to see how we do it just to make sure. Chances are you're using one of those platforms. If you're not, obviously we could always answer your questions specifically, but then we're also going to ask for, we're going to answer any questions that come in because we're going to use this as a training video. So I'm going to try to go fast, but I'm going to try to be methodical, and no man gets left behind on this call, okay? So here's how we do it, by the way, and closed positions. Because everyone always asks me, you know, do you do the trades yourself? As you can see, I do them for a little bit more. So this is just for this year. This is for 2014. So we're not even 2 months in. And you could see, like, any of the trades we made, ANF, I made. CSIQ, I made. eBay, I made. In fact, I'm actually up more using this strategy. What you'll see as you go through this is First Solar was a trade that I lost 1,000 in. So if I just did this, I'd probably be up 17,000 right now for the year in just this strategy, in just this account. Netflix, I got messing around with a short at one point, stupid, lost 4,400, and this PCYC was I made money in it too, but this wasn't on there. It was too speculative. So those two trades alone, you add back $6,000, and it's at 14. So as you see, I've done every single trade. The Potash trades, let me just go up. Abercrombie, eBay. And so right now for the year, it's totaling 8,100. It should be closer to 15. So I've done every trade we've made, and this is what it looks like on my screen when we're doing it. Okay. So what I do is, let's say I wanted to do a trade in Dunkin' Donuts right now. I don't think Dunkin' goes out every 2 weeks. So let's say let's take a look at one of the ones we've done, Silver Wheaton. So let's take a look at SLW, okay? And so I type up SLW, and here it's going to tell me the underlying stock. It's trading at 25.62. So this is an actual trade that we'll probably end up making on Thursday because market failed to hold 16,200 on the Dow, which is a key level. We like silver as an alternative play. That's kind of how our thinking goes. You'll see us trading a lot of the same stocks. We traded Microsoft 6 times in the last couple of months, eBay 6 or 7 times, Verizon 6 or 7 times. So we are pretty consistent with what we're trading, okay? So for SLW, we would sell to open, See, SLW, this is on Fidelity. Strategies, calls, and puts. We're going to sell to open, 3 contracts. The expiration date is February 28th. That's Friday in this week. That next one will come on next week. And right now it's trading at 25.50, so it's 25.62. So we would do the 25. There's not going to be that much there, but 14 cents. I just want you to see the screen. I can't even make the trade right now because the market's closed. So SLW, calls and puts. Calls and puts. Sell to open, 3 contracts, February 28th, 25, put. This is the bid and the ask. Now, here are the stocks we're trading. This is going to be typical. Now, the market's closed, so it's not going to be as good. But even now, with it closed, look at the bid size. That's 85. That's 8,500 shares. So right now, if there's, 105 people on this webinar, say even 200 people, 200 times 3 contracts each will be 600 contracts. So we're not even wiping out the first level of the bid if all of us do it. So if there's any concern over whether we're going to move the market, no, because the stocks we trade are not set up to do that. Ask, similar, 8,300. And what I'm doing is I'm just taking the market right there. I'd be taking 14 cents. My order type would be a market order, okay? And in this, we're not doing this one, but my profit would be 42. Now, max loss, it says substantial. Why does it say substantial? Because I could end up owning the stock and it could go to 0, but that's not going to be the case, okay? And let me show you another kind of the research we do. And then you'll preview order, and it's saying, the markets are closed, but that's as far as it will let me go in this demonstration. Does that make sense to everyone? Because if not, we're going to go through it. But the underlying behind this, and I think I showed this to you guys in the webinar the other night, if you take SLW, okay, if you take SLW and you go back, even if you go back to the last 1 year, right? Okay. Look at this level. Look at this level right here. These are the kind of levels we're playing off. You see that? That was the support. We ended up owning it right here. Our risk was nothing. And look at the upside. So if you end up owning one of these stocks, again, it's a stock we're happy to own at this price. Happy to own it at this price. That's what goes into what we own. That's the main ingredient for anything we're doing is, if it falls below, would we be happy to buy it at that price? If we would not be happy to own the stock at that price, then the trade is off and we're not doing it. I'm going to shoot through some questions now because there's a lot, which is great. And then Todd will present on the option monster, and he'll also present on the Thinkorswim screen, and he'll also give an example of credit spreads just to make sure everyone understands that. Okay. Going through some of the questions, Patrick wants to know, please review Verizon's strategy for the week. Okay. So take a look at Verizon. Verizon, we sold the 47 contract this week for 50 cents, 47 cents. Okay. And it's trading right now. Todd, where's it trading?
Verizon right now is trading at 46.29.
46.29. Okay. So again, why would we be happy to own Verizon at 46.50? Okay. Starting over here, this was the level. Here's a level, 46. Our risk is minimal. Now, obviously, if it goes below here and it starts to fall out of this base, we're going to put a stop in. We'll put a stop in right away, and we'll be out of this trade. If it holds this level, we're getting the upside, or chances are we'll just collect the premium if it does what it did last week. Okay? That's what we're looking for. So that's the Verizon trade. So when we did Verizon for this week, take a look at it. That was the last one. Todd will have that probably up. So when we did Verizon, we sold a 47 for 47 cents. So we're going to own it at 46.50, which is right in this congestion right here. Again, price we're happy to own it at right here. Okay. We have some nice upside, a couple points. 50 cents of downside we'll probably give it on 300 shares it would be, or even if it's 300 shares, 400 shares, be $150, $200 will be our total risk, but most likely we'll collect 120 in premium. So this is a great trade because chances are it'll just stay there. Right now, if it came in on 3 contracts, it would be down $60. And I'll go through what the other trades are in a little bit. So that's the Verizon strategy. David, if we are put the stock, and Todd, I always wonder about this. Are you put the stock or are you option the stock? I just want to know the correct lingo. Are you put the stock or are you option the stock?
You're put the stock. They're putting it to you. It's the terminology. The stock is being called away.
Called away or put to you? Okay,
put to you and called away.
Guys, I'm telling you. The reason why this strategy is so interesting and there's nothing else like this is what everyone's been saying. I was a stock trader my whole career. It wasn't until last year, Todd's always done options where he's like, Adam, you have to do this strategy. And we kind of combined my stock picking skills with his option strategy expertise to target the best of the best stocks. That's what's making it work so well. And so, when it comes to strategy, you guys might even know some of the strategy better than me. I've just always been a good trader, good at identifying levels. So that's why we'll make sure. Like I even wrote, the way I thought of it is we were selling in the money options because, listen, if Verizon's trading at 47.80 and we sell the 47, well, we're in the money, right? But it's actually out of the money options because you're viewing the trade from the perspective of the buyer, not the seller, the position taker. So he would be buying it out of the money. We would be selling it. Okay, so we're taking positions in the money. Okay. So if we are put the stock, do help us in managing it, i.e. tell us if you're going to sell, some, all, etc. 1,000%, David. We'll tell you where our stop is. We'll let you know when we move it up. And if we trade a position, it's not that often, but let's say we realize there's earnings coming out or some news, or we know people are going to need guidance, we'll send out an alert to everybody in your email letting you know, hey guys, we changed this position, this is what we did. And we have done that a couple times. And like for anyone that wasn't on the call that we did right afterwards, we sent it out telling them to sell LNG because it had earnings the next day. Dan, what is the minimum volume you look for in an equity to do a short put? Same as my stock trading strategies, but probably a little bit higher because we want to, not every stock has weekly options. Remember, weekly options is relatively new. It's only been going on for 2 years. So there's a lot of stocks that do not, like Dunkin' Donuts does not have a weekly options. So Todd, would you say I'm correct in saying that if a stock has weekly options, the volume's probably going to be good? Is that right?
Yeah, typically, and they're growing. And to answer the question, we will not, if we don't think that there's enough liquidity to handle everybody that we're dealing with, we're not going to get involved. So typically, you'll see the stocks that we're getting involved in options will trade well in excess of 300 to 500 to 600 per strike all the way in. And that's what you have to understand. We are only going to trade in liquid stocks. So when we see something that there's not enough volume, we will not trade it. No, based on, because everybody on the call we want everybody to have the same opportunity to be able to get into that option. So, but yeah, when they have weekly options means that there's going to be more action, and the weekly options are growing every single day. There's getting more action, and now you're seeing, like in big stocks like Apple and the spiders, there's weekly options upon weekly options now. So we've got, again, they're going to be liquid or we're not going to trade them. So when you look at it, know that we're going to put you into a liquid option. And again, typically they'll trade 300 to 500 to 1,000 contracts per day, because that shows us that there's an opportunity to get in and out. And the other thing you'll see, most of the things we trade, the bid versus the offer or the ask price will be a penny to 2 to 3 pennies wide, which also tells you that there's plenty of liquidity, because by law, the best bid and the best offer are always quoted on the screen, and when the narrower they get, the more liquid that they are.
Okay. Can you explain how you screen for candidates? What are you looking at? How does implied volatility and implied volatility percentile play into trade selection? Well, if there's going to be higher volatility, it's going to be a more expensive stock, typically, or it's going to be a stock that has news. So we're not looking to get the 5 points that some people do, the 10 points. Like if you looked at, you know, like if you want to look at like a stock like this, right? And you want to sell to open Netflix for the week, I mean, it's going to be crazy, right? Where's it trading? It's trading like 450 right now. Where's that?
Yeah,
453.
453. So sell the 450. So sell the 450.
So say you wanted to even be conservative and sell the 440 for the week. You're still getting $1.60 for 13 points lower. You know, but that's the kind of stock that you could end up getting it and it will drop 30 points, and that's not what we're looking to do. This is, John, this is a performance-based service where we want income coming in every week. So when you look at the list of these trades, they're going to usually be towards the lower volatility. Like we've never taken $1 premium since we've been doing this. High for us would be 80 cents. We're looking for the slow movers because if we end up owning the stock, first of all, we don't want it to wipe out a week's worth of work. Second of all, we love the idea of just collecting these premiums, but also trading off of good levels. So it seems to me if we do get it, usually you're getting still a couple points off those quality levels, like SLW in the low 20s, or Verizon a couple times. Potash was a great one.
Can I add something here?
Yeah.
Okay. So on volatility, the implied volatility changes from stock to stock. The companies that we're getting involved with, the best way to think about it is if you take a company like Coca-Cola, what is the likelihood of an event happening in the next year in Coca-Cola that's going to have a major effect on that stock? And by right, you would say not very likely, which would mean the volatility is going to be much lower, which means the overall movement of the stock is expected to be much lower. Whereas when Adam showed Netflix or Tesla, for example, Tesla is a very high volatile stock. The stock moved $30 today. We don't get involved in those because we don't want a news event that could happen any day to take us out of a position or to move the stock around. So what we're using is we're using much more conservative stocks. These are stocks that you want to own in your long-term portfolio that you want to just collect and create your own dividend product. Whereas the higher volatility stocks, those are stocks that you trade, you make momentum trades, whatever. But for this program, we're staying away from that type of animal because we don't want to be successful until Thursday, and then some major event happens because in those higher volatility stocks, there's more likely news. That's the higher volatility tells you that there's more likely something to happen. And when I show you my platform, I'll show you how you know what the expected move for any given week is, because that can be very easily calculated out. So we don't want to, we want to stay away from big expectations, because big expectations could, yes, go in our favor, but yes, they could also go against us. So it's easier to stay away from there. But however, when volatility picks up in the general market and the VIX starts to climb, then what will happen is our overall stocks will have higher volatility just by nature of the normal market. So we will collect higher premiums when there is more premium in the market to be collected.
Does everyone understand that? Okay. All right. So now, okay. The spread, when we do credit spreads, Patrick will show you the credit spreads of Verizon. From Daniel, Adam and Todd, first, bravo, and thank you. My question, the strategy is great and certainly has benefited from a generally rising market. What strategy might you do in a bear market? No recommendations for the week, buy puts. Well, actually, the market's gone down this year. And, you know, that's what's been so interesting to see. And if you look at the Dow, I mean, we could look at from the beginning of the year. I mean, look at this week in January. Look at even from January to February right here. I got to look to see how much we fell. So right here, we dropped to 15,300 around February 5th. Okay, so that was a big drop from right here. So we've gone down over 600 points this week. So let's take a look at it. February 5th, Starbucks, we collected 100% premium. eBay, 100% premium. Potash, 100% premium. So when you target the right individual stocks, it's going to work in a market. Or when you do alternatives such as silver or steel, again, those are going to go with you. But would we be opposed to doing less trades or smaller contracts if we were nervous about the market? No. By definition, a more volatile market means you could trade less and make more money because you're going to have bigger swings. So if we were getting in a situation where we were really uncomfortable with what the market was showing us, listen, you guys are going to be with us every week for the year. I'm not trading just to trade. I'm assuming we're going to find trades every single week. It's never happened that we haven't. But we would not be buying puts in the market. We would stick to this strategy and just make sure that our selections are, right, and maybe go a little bit deeper out of the money to secure it, take advantage of the volatility. That's what we would do. If you missed the presentation, can you access the recommendations if someone that will be available? Every Thursday we do the picks, or you could go to the website. If you have any questions about how to get access into the website, just email Stephanie@adammesh.com. They're all on the website. We're not doing new picks today. Those are done every Thursday. This is just a special call. Can you explain the Verizon exit strategy if you do the credit spread? So Verizon, that was 2 requests on that. So we're definitely going to do Verizon credit spread when Todd takes over because that's his specialty. Well, compared to me. Okay. James, if it drops fast and you have 4 contracts on Verizon, you have to buy $16,000 worth of stock. Where's your stop handle? Usually on Thursday, if we can anticipate if we're going to own the stock, and we'll let you know where to place the stop. If all of a sudden it drops on Friday, then we'll let you know where you're going to own the stock again. But again, I say these are stocks we're happy to own. That's the reason we do this. So yes, we could end up owning 16,000 worth of stock, but that means we want to. If you're ever going to be uncomfortable owning 16,000 worth of stock, trade less contracts or do a credit spread. These results are like literally everything's been taped down to the minute. This is why this service is the #1 thing right now, is because of these results. But the best trades, the LNG and the SLW, are when we own the stock. So it's something we're willing to own. There will be some losses in it, but this has been now August, September, October, November, December, August, September, October, November, December, 7 months. Okay, so time tested, and again, just do the credit spreads until you're comfortable owning the stock. What happens with Verizon this weekend? Credit spread, do we do something? Okay. If Verizon drops to 44.30 tomorrow, will you do anything with this trade? It's funny. It's never happened to us in 7 months where a stock's fallen that far out of the money. But let's take a look at Verizon. Okay. Because our break even in this is 46.50. Okay. If this dropped down, let's say 2 points, because that happened to me in this stock, Solar City, I had sold the 70 puts, and this was not one of the ones. This would be too volatile for this service, but always happy to discuss these. This thing dropped down. Look at this. It dropped down to 65 February 5th. I had sold the 70. So what I did when it broke below 70 was I sold short the stock. And then I actually covered down here, and the stock came all the way back up. So that trade worked out pretty well for me. So that is what you could do if it gets to the point where you're like, it's a risky proposition though, guys, because if you do that and it comes back and you're short, you just wiped out the trade. If we ever felt you should do that, we will give you the guidance and say, all right, Verizon's now at 45.50. It's a point out of money, and we would tell you could buy a put to hedge the trade. and that's probably the best way we would do it, is we tell you to buy a put. The alternative, if you feel comfortable, would be to sell short the stock, but we'll go over that, and we would certainly give you guidance on what to do with it. Do you let the options expire or buy it back? You let the options expire unless we feel like something could change the trade and it's too good not to take off, and then we'll tell you to take it off. We're giving you the blow-by-blow on how to do this. On IV, even for KO, the current IV is 16. KO has a range from low of 14 to high of 24. Do you consider volatility stock against itself? For example, selling premium when it's... Todd, do you know what he's referring to with IV?
Implied volatility. Repeat me the question.
But even for KO? What's KO?
Coca-Cola.
Oh, so he was responding to your question before. I thought he was like, okay. So he says, on implied volatility, even for Coca-Cola, the current implied volatility is 16. Coca-Cola has a range from low of 14 to high of 24. Do you consider volatility stock against itself? For example, selling premium? No. We're not doing that, John. You're trying to outthink something that works so beautifully. So, if it's not broken, don't fix it. And also that implied volatility for the implied volatility has a low of 14 to a high of 24. I mean, just look at the range of the stock. Coca-Cola doesn't move that much, and also it's for the week. So how much is this going to move in a week? Not much. When you use credit spreads, do you send out a notification when you choose to exit a trade, or is it possible or recommended to use a stop loss to automatically exit? Taz, do you want to take that one?
Yeah, on credit spreads, we will enter. If we're going to exit, we will send out a notification. We will never, ever use stops on credit spreads. The credit spread itself has a built-in risk-reward parameter, and the only thing that can happen, only bad things can happen if you use a stop on a credit spread. The only time that we ever exit a credit spread is if the spread is going to be split between your long and your short on expiration. And in that being the case, if you do not want to take delivery of the stock, if you do not feel comfortable owning the stock, then you will have to cover the spread or buy back the short option. But we do never use stops on credit spreads, and they're self-defined. If both legs end up in the money, they automatically come off because you get exercised and assigned automatically. And if both legs are out of the money, they expire worthless. So there's really only time we worry about credit spreads if they're going to be in the middle of our two levels, and then we will send out an instruction how to handle and how to get out of it.
All right, thanks, Todd. Okay, Dwayne, if a put I sold is assigned to me and the total purchase price exceeds my account balance, do I have to exercise my put using a credit spread, or can I sell in the open market? How long do I have to sell? Dwayne, I believe if the total purchase price exceeds your account balance, they won't let you do the trade. Right, Todd?
That's correct.
Yeah.
And, I mean, if you have margin, if you have margin, but if you over exceed your balance, they will not let you make the trade. Is correct.
Okay. All right. AIG March 50th call is price 77. That's a P of 57.77.
Break even.
Are you seeing? Yeah. Are you seeing that question? Yeah, you want to answer? I don't even. I can't.
AIG March 50 call is priced at 77 cents at a break even of 57.7 out of the money. AIG 45 call is priced at 470, thus a break even of 49.70 in the money. Okay. Seemingly the second trade is more convenient, but why are there almost 8,000 contracts in the first and 0 on the second?
Well, remember the market's closed now too.
Well, no, but the answer to that question is simple. When options get deeper in the money and they become a surrogate for the stock, they don't trade as much, because why get involved in the option if you're going to trade something that has equal value to the stock that has no premium left? Then you don't trade that. So people don't trade once it goes to parity, as they call it, or there is no premium left in the option. There's nothing left to sell, so they do not trade as often.
Okay. I've only been I got it. I've only been a subscriber of your home service for a little over a week, but I can already tell that I'm going to like it. I've been trading options for 2 years with marginal success. I'm primarily trading in traditional IRA and Roth IRA. Okay, no question. How to handle trades going the wrong way. Do you have guidelines that you publish to your clients that you follow, such as take assignment of stock if prices of money? Yes, we tell you exactly what to do. Again, assignment of stock, yes. I generally write covered calls at the money up to delta 0.30 when I've been assigned to further reduce my cost basis. What are your thoughts on writing covered calls on stocks that I've been assigned to? Do you have any contingency plans for a major, I assume, sell-off? We're not going to be doing covered calls. And the reason why we're not going to be doing covered calls is it goes against what the philosophy is, again, which is this is an income strategy. So if you own the stock, right, and then you're selling the call for income, which is a covered call, you still have the possibility that the stock could drop out below versus why not just put in a stop and exit the trade. If the stock is getting to a price where we say it's a stop, that means something's gone wrong and it's broken its level and we want out of it. Also, as a professional trader with over 17 years of experience, I found that covered calls seem to get me into trouble because I end up doing exactly that, holding the stock, saying, oh, well, I sold the call, so I got to hold it, and somehow something goes wrong, and pretty much when it goes below your support, yeah.
Let me just say this out loud, excuse me, so everybody hears it. We never, ever do covered calls. It's a terrible strategy that at one point people were sold on the idea. Covered calls limit your upside. Immediately when you sell a covered call, you take away the potential upside in the stock, and you still have unlimited risk to the downside. If you feel compelled to want to sell a covered call or collect premium on a long stock that you own, you can certainly sell a call credit spread above, which means that you give up potential profit, but you can still set a stop on your stock, because if it goes below, you're still going to collect on your credit, and you can still get out of your stock because you don't own or you're not short the naked call. The covered calls is a very poor strategy for managing, especially with the options model the way that it sits now. So please don't do covered calls. If you feel compelled that you want to collect some premium on the potential upside, sell a call credit spread. It's the opposite of what we do, but if that's what you want to do, that's a much better route, and you get to participate in the upside movement of the stock. If it happens to explode, you get to participate on the upside, and you still get to set your stop on the downside with limited risk if it should go against you.
And this one got cut off. Do you have any contingency plans for a major, I assume, sell-off? The beauty of this is it's weekly options. So, you know, you're going to have an exit to your strategy. If we have to stop in, these things end every week. Your portfolio gets cleaned out. So you're never going to have, if you're doing just this strategy as an income strategy, and the goal would be to, like if you put like 15 grand in an account to have 30 by the end of the year, that's what we're looking for, until you get better. And then if you feel comfortable, do bigger size, or even do smaller until you feel comfortable, get to normal, and then eventually do bigger. But let's say on any given week, the most positions you're going to have is 3. Okay, that's what you could get options, put the stock. Okay, I guess if you came into the week with a stock or so, and then all 3 got hit, well, the one you came in with would mean that it hadn't hit a stop yet, so you already have a stop for that. And if we're doing 3 contracts per trade, yes, you could end up owning 300 shares of 3 different stocks, which would be a total of 900 shares. I guess what I'm thinking is, for many of you, that would be a bigger position than you're used to. For me, it would be like nothing. Now, that's all relative. I understand that. But that's the risk that we take to get the returns we're looking for, which I think it's a minimal risk that you could own a total of 900 shares, because these stocks don't move that much. I was just looking at Starbucks, if you saw me. This thing doesn't move more than a couple points in a week. But let's say like doomsday happens. The market in the 1 week that you sold 3 puts goes from 16,200 to 14,000, right? Well, you might then have from the starting point, because remember, you're selling these out of the money, so it has to hit your break even first, which would mean it's dropped a couple points probably. From that point, let's say they all went down 4 points, right? Which would be disaster in my mind. Then you would lose a little over $3 grand if the market dropped 2,000 points in a week. And your stocks would have to go down. They might not because their levels might hold. That would be a lot for these things. And you'd still end up probably having a positive month because of the implied volatility that would be the next, because of the volatility that would come the next week. So could that happen? Of course. If we see there's signs that it's going to happen, are we going to load up into it? No, we're going to be careful. But we already had that 1,000-point drop, and it did nothing. Our strategy was
we had our biggest month.
yeah. So we should be able to take advantage of the volatility, if anything. Do you pick these stocks from a watch list of a couple dozen that you watch fundamentals closely, or do you scan the market in general for stocks with certain technical setups? So in terms of that question, I'm around the markets all day, every day. I do have multiple watch lists, but I have my stocks that I know are my steady, consistent ones that I love. So it for the most part, comes from my, a list of 25 to 50 stocks. That's why you see a lot of repeats. It's always based on technical analysis, but fundamentals are factored in. We'll watch the stock for fundamental or technical. We will only execute a trade based on technical analysis. That's for sure. And then, Todd and I are kind of a good team because some people introduce me to some of his stocks too, and vice versa. But usually we're in sync, and you'll see when you're on the calls with us, if you haven't been the way we, I'll say one and he'll say one, we'll be like, I knew you were going to say that. Because it's clear as day, that's the level, that's the stock, it just makes sense. Okay? Is this your only service, or do you offer any others, like managing? We've been asked to do that multiple times. We have, let's see, I have a stock service. Todd has a service that's calls and puts. Is involved with Phoenix Options, but in terms of this, this is my favorite service right now. It's the number one thing working. It's the number one thing I would recommend to people. So I definitely encourage you, if you're getting to know us, use this and make money with us. And then, obviously, if you want to do something else, we'll do it. But this is what I feel so good about right now. Again, is this your only service? Again, no, but we should focus on this right now. Okay. But what do you look for? This is from Jeff. What do you look for when picking stocks to trade for these spreads? We look for stability. We look for key levels. We look for stocks that are in a range where they've just broken above support, but they hadn't really been moving that much anyhow, like Microsoft, that we did 6 times in the last couple months. Look at this chart, okay? We started trading Microsoft in the low 30s, right? It was just stuck. It wasn't going anywhere, so we just keep selling it, and we just keep taking money, and you see the congestion? We love that, right? Once it got above 30, right, and we started doing this in August right here, it hadn't been below 30 in months. It was such an easy level to play off. So something like this, where it's above its support, and even if it goes below support, there's like another layer of support below it. Those are ideal trades. Does that make sense, Jeff? Do you use IBD rating to find good stocks? No. What to do if the stock price at expiration is between the strike price of a credit spread? Todd, that's a good one. We've answered this before, not today, but so we'll definitely answer this. Tom, what to do? You got it.
If it's in between, you have to take off the spread, and you'll be able to get. If it's in between, you'll most likely be able to get that spread off for even. Excuse me, because that's just the way it is. Because until the final bell rings on Friday, there's some premium left, so you'll be able to get that spread off. And if it's in between, or if it's just in the money, you need to take the spread off. Options today are automatically assigned or automatically exercised. So if you're split, and let's say you're in LNG you had the 41.42 on, and the stock closed at 41.50, then you'd have to take off the spread because you don't want to take delivery on the stock. So simply, if it's in the money, and again, we'll be watching that, and we'll know, and we will send you an update if that needs to be done in any particular spread. You know, we watch these. First of all, we both have them on, either naked or the spreads on, and we're watching them all the time. I mean, other than when I'm doing media work, I'm sitting in front of 5 monitors watching all of the markets trade at one time. So I know exactly where we stand and exactly what our positions are.
And by the way, before you answer, maybe as a bonus for all the people on here, because we have such a great crowd, we'll try to put on a trade that will end on Friday for you, because today's Tuesday, that we could tell you about for tomorrow morning. It could be a fun thing to do, but only if we find something good at the end. Maybe I'll try to do like a little extra trade. Todd, answer that. Can you go over the support resistance that you use to enter position, explain what you're looking for to enter position? Okay, so Cindy, I think I did that, and you were there for with Verizon, and Starbucks and SLW. If you want more, let me know, and we'll certainly do it again, but this question was from before, and I think we covered it. How do you play your trade if your short leg goes into the money before expiration? We just answered that. How do you play your trade if that was the same one. Can you be signed if the short leg goes into the money before expiration? You can't ever be signed until expiration.
Hold on.
Yeah.
Now you can be. There is called early assignment, and you can be assigned.
See?
Yeah. But remember this. Now this is important.
How does that happen?
Well, it only happens if the trade is really bad. Okay, if the trade is really bad and you're in the stocks that we trade and it goes deep into the money, you are going to get assigned on the short leg. However, until Friday, as long as you own the long leg, your position has not changed one bit. You have no concern, and then on Friday, your leg is going to exercise back and take off the short position. These trades have no more risk, no matter when you get assigned, as long as it's before the Friday expiration, and you own the long leg, which is why we do the spread, because we want the protection. You never have to worry, because you always have the right to exercise. And if you do nothing, you'll exercise yourself. It'll be automatically exercised on Friday. Now, the other side of that coin, if it does happen, now it doesn't happen often because that has to have an awfully big move. But if it does happen to you, mathematically, you're actually in a better position than you were before once it went against you, because now you actually, in theory, own the long stock, and if the stock happened to run up $10, you would make all that money because your long put would go out worthless. But the bottom line is assignment is no problem, and as long as you own the long leg. So if it happens before Friday, you have nothing to worry about. And on Friday, the position's either going to take itself off or we're going to tell you to close it. So early assignment has no effect whatsoever to anybody.
All right, which website will we be using? Adam Nash or Options Money Machine? Options Money Machine. Bruce, why hasn't Verizon been assigned yet? Because it's too close.
Options don't get assigned until there's no more premium left in the option. Think about it this way. You're the insurance man selling the premium.
I've never seen it happen once since I've been doing it.
Right. Well, it won't.
You've been doing it a lot longer than me. Yeah, I know you've seen it, but and that's probably, does it happen in weekly options? Probably not. I guess it'll only happen if like you did something in like Tesla or something like that. If you were going the other way in Tesla.
It only happens when there is no premium left in the short option, and then somebody will assign it. That's all. When the premium is gone, it'll get assigned. And typically, if you get a real big move, which we have not seen yet, you can see an early assignment. That's all. It's really, again, it does not change your position one bit whether you get assigned or not. It has no meaning to you until Friday. You cannot lose any more money on the spread. So it will happen, and it will happen to us. But again, it's when a stock when the option loses all the premium and it's trading the exact same price as the stock, that's when you'll get assigned.
Jay wants to know. I'm not laughing at Jay. I'm laughing at myself. Why not do bear call spreads on top of the bull put spreads? I have been doing them. And I'll tell you, when these stocks get squeezed, there's nothing more unpleasant. The downside to these stocks is zero. The upside's infinity. So GameStop's the stock I've been short that I sold puts in. But you know what? My puts for 50 cents don't mean much when this stock goes up 250. It's not something we're completely against. It's just for the
Jay,
there's no need for it.
Jay, you're actually talking about what's called an iron condor, selling a spread and selling the put spreads, and we're not. That's not what this service is about. We're about grinding out the money in good solid stocks that we want to own in our IRA account or in our regular account, where we just want to make, we want to churn out 100% a year, basically. That's our goal, is to approximately make 100% a year. And what happens is if you're trying to middle the thing by selling bull puts and bear calls, you're putting on what's called in the business an iron condor. That's not what this service is about. Then you're always hoping. You don't know what to hope for. We sell puts or we sell the put spreads, and what we're looking for is for that stock to either hold where it's at or rally. We don't care if it rallies, it goes up, great. If it sits there, great. It doesn't matter. But when you start mixing strategies, now you're really getting to, well, now I got to make a decision. Do I adjust this? Do I do that? And we don't make adjustments. What we do is we make the trade, and then if the trade works out, great. We take the money, we put it in our pocket, and we move on. If the trade goes against us, we put a stop in, and we liquidate out of that trade, and we look for a new, better trade. We're not interested in trying to manipulate around the market and trying to always guess which is the right side. It's easier. You put the trade on, works, and it's worked 48 out of 54 trades. It's worked perfectly. We take the money, and if something goes wrong, we put a stop in and we get out.
Is that the number? Because that was the next question. How often do you put the stock? So in 54 trades, we put the stock 6 times. Now, also, I know a lot of people are trying to reinvent the wheel, and they're offering different strategies and stuff like that. I'm telling you, and for those of you who heard us on the Option Monster call with John and Jerry, there's not much else out there like this right now. It's only been going on for the last 2 years, and it's like something that could be taken advantage of, and it's working so well. I can't help but do this. Look at this. You got to stick with this. Let's just, this is one of those times where just, work with us. I definitely want you to understand the why we're doing it, but a lot of times suggesting other strategies. At most times, anything else that we're doing, most times anything else, the reason we're not doing it is because it's going to change the risk-reward parameters, which we've come to fall in love with at this point. Okay. What are your guidelines on bid size to consider? And I think we hit this one up earlier, was most of the stocks that are doing weekly options are going to have enough. We haven't run into a problem yet. Usually there's more than we would be able to sell for the current bid. If it's a little more liquid, I think Line might have been the one.
Line, we put a restriction on. Exactly right.
Yeah, and so Line was the one where when we're concerned about the size, then we'll instruct you on how to navigate the accounts. Doug, will you show how to enter credit spreads too? Yes. Is this the wrong strategy for me if I don't want to own these stocks? Yes. Then you want to do the credit spreads, which we're going to go over to make sure you don't. Can you explain what actually happens when one of these trades loses money? Yeah. In First Solar, I don't have the prices here. We'll do it when we bring up Todd's spreadsheet. We ended up owning the stock, and we put in a stop and took a 2% loss. So it's just like owning a stock and taking a loss. That's what happens. In terms of, do we hug each other and stuff like that? No, because we're not in the same office. But no, it is part of the game. We understand that we are going to lose on trades. It had the nickname 17 trades because the first 17 were right, as you see, and then it actually, was that right? Or maybe it was 17 in a row? Because we lost in potash here. So
yeah, we got the 17 trade. We wanted to do something between August and the end of the year. We were going to put together 17 trades and have everybody.
13 to 33 was our biggest streak. We did 20 in a row without having a loss, and then Microsoft was a loss. And yeah, right now our last 12 in a row have all been winners. And one loss is 2%. So it doesn't matter if the stock is in a downtrend, not if it has layers of support underneath it. How do you know how much margin each naked short put requires? It's the amount that it would cost to own the stock at the price you would own it at. So, you know, like if it's $50 stock and you could own it at, if you could end up owning a $50 stock, 300 shares, that's going to be 15,000. I understand everything, but I'm having trouble on how to trade out of a spread on Thinkorswim when it's going against me. My strategy is to get out when I hit break even. Is that smart or not? Thank you for the help. Todd?
You mean if this trade is going against us and it hits the break even, you want to get out? You know, again, we like the stocks we're getting in, and we're not doing this to break even. And when we use the spread, we don't typically get out, you know, because I want to let it move. You know, if for example, just last week with Verizon, we were in a little bit of trouble in Verizon, and then we got the big rally on Thursday and Friday. So I'm really, when I put those spreads on, I'm pretty much willing to own them until they expire. I don't want to trade around them unless we say that something changes, and I will give you prices of where to get out, and I'll show you when we get to Thinkorswim how easy it is to navigate out of them when you get there.
It's a tough thing, Ed. If it's close, I'm not going to. If it's gone outside what you're comfortable losing on a trade, which hasn't happened to us, the only loss we had over 2% on a stock was WAG, and that actually happened because we tried to stay in it. It wasn't WAG, I guess it was X. We tried to stay in it, and we readjusted the stop to allow for a little extra volatility at that time, and so it took us down deeper for the 6.5%. And that was like when it was in the 20s, so it was like $1.20 loss or something like that. So for stock purposes, usually if you do it with the stocks we're trading, it's not worth it. It's going to be too close. You know, I think if we ever felt like it was time to get out, we would tell you guys, like, let's just get out of this right now. Bill, I've been trading options for about 14 years. Just wondering if this market is going to get saturated as so many people are selling options and services, pushing this type of trading. I don't know how many other people are doing this specific type of trading. They're probably the ones help building it right now, 2 years in. Usually you have like 5 years of growth before you experience saturation. Not until all the stocks have it and stuff. We have some time, but yeah.
Can I answer?
I think yeah.
Okay. Bill, I've been trading for 35 years, and when I first started trading, they only had quarterly options. Okay, we went from quarterlies to monthlies. Now we have weeklies. The option business continues to grow. The derivative markets continue to grow. This is going to be the hottest trade ever, and I don't think that it will ever become saturated here. I think this is only going to grow and become bigger, because what this now does is it gives all the big hedge funds, all the big traders, everybody in the world the opportunity to trade on a weekly basis and get involved. And option volume continues to go up every single year. And I don't see this ever becoming saturated. In fact, I'm so excited about weekly options and what we're doing here that I think this will go on forever. It may get better and better. So I don't see it ever stopping. And as I said, I've been doing it for 35 years. And when I really started, there was no puts. I started when there was calls only. So that's how long ago I started.
Music's about to come on. the inspirational rally music. Good speech. Mark, you had indicated that if the price of the stock at expiration is outside the two strike prices on the credit spread, to just leave it alone, it will take care of itself. What if the stock is below the two strikes? I'm assuming the sold put will get assigned, and will the broker execute the bought put? Do not want to take ownership of the stock because of limited funds. And I think Todd answered that before you asked it, but we'll go over that again when we cover credit spreads. Go ahead. What do you want to say?
The bottom line is, if both legs are in the money, it'll exercise and assign by itself. If both legs are out of the money, it will cancel. It'll be worthless and zero, and you'll collect. So there's no concern.
Tom said last week the underlying stock value as its strike price for naked short puts was about $50,000. Does the $15,000 account value support margin requirements for all naked puts for last week? What about the put position still on for the prior week in addition? So we owned. Right, we own we own just LNG, which would have been like $12,000. No, so in those cases, then what we say is we go in order. Last week we put on 4 trades. We said if your account can't do all of them, just do the first 3. Like we go in order of our favorite first to least. So, or you could do less shares. Sometimes it does go above. We're trying to keep in line with a $15,000 account, but a lot of times there's like a good energy. We have a good feel, and a lot of people want more. So we'll put an extra one on. So we'll look to keep it as close to possible as that 15,000. But at times it can go over, and then you just do smaller shares or ask us about it on the call, and we'll give you live answers right there. Will you trade a stock if the open interest is lower than 100?
No.
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 So I know about the earnings concern. Yeah, right. We won't trade a stock into earnings, right, Dan? How is dividends concerned in these trades? You don't really know when dividends are being paid, but for the most part, when we can anticipate it, because you get a feel for when they're going to, we'll try to avoid them because a dividend will bring down the stock, and you don't own it at that point. So that happened to us one time in either Duke or Verizon, where it sold a dividend, which caused it to trade lower. And we eventually put the stock, and it ended up trading up much higher and becoming a winner later on. Okay. When doing the credit spreads, does it make sense to do more contracts to offset the lower credit amount? No. No. We take that into consideration when assessing the risk. You know, there's a certain amount we're willing to own. Yeah, but if you're looking for more money and you're having success with the service and you want to get a little bigger, you could do that. That's what I do. But usually we'll try to be specific. If you're trying to just stick with us, especially at the beginning, then definitely just stick with us. If the stock is put to you and you own it, would it be smart to turn around and sell it, cover call? Oh, sorry, we answered that already. How do you provide trading guidance intra-week other than Thursday? We send out email alerts. You could always email us. Do you contact us by email or by text if there will be a change in the trade? Right now we do it by email, but we're working on text alerts. We'll probably roll that out within the next 30 days, text alerts. All right, Ed got it with covered calls. My idea was the tax rate for short-term trades. I don't know all the short-term trading I do. I think there is a number. Ask your accountant. That's who you ask for tax stuff. I think there's a number. I'm not sure if it's 150, 250, or maybe 1,000, but there's a certain number of trades you make that would consider you to be a professional trader, at which pace you get taxed for ordinary income versus gains. Ask your accountant about that. I don't even think I'm allowed to say that stuff. So I'm allowed to say what I just said, but ask your accountant. Did you answer my question on doing? Jay wants to know if we answered his question on doing iron condors.
I answered the question on iron condors, and the answer is no, we're not doing iron condors.
What BD allows naked put selling in retirement accounts?
All of them do if you have the cash, okay? If you have cash in your account, then you can sell naked puts. But the difference between a IRA account, retirement account, versus a general margin account is an IRA account, so we are not allowed to use margin. So you have to have enough cash. So, for example, the $15,000 portfolio we're using on this call is based on margin, which gives you $60,000 worth of margin during the day. In an IRA account, you don't have that. So that the equivalent would be using more cash, because you're allowed to do this because it's like buying. It's the same as buying a stock. So you can do credit spreads and sell naked as long as you have the cash in your account to cover.
Would you still do naked puts in a downtrending market? Yes, we have successfully. It's just all a matter of which stocks you trade. Can we stay with trading specifics? We seem to be bouncing around. True. Please explain credit spreads. We're going to do that in a second. And then just 2 more, going through them. Okay. Naked puts. The bull market worked great. What are your concerns with market profile changes? We addressed that. Thanks, John. Bob, I'm retired. I have a nice sized IRA and Roth IRA. I really like the strategy. Do you have any recommendations regarding what percentage of my account should I earmark for the strategy? I would say go with the recommended amounts now, and if you feel more comfortable, gradually increase the size with profits. Do you see any additional weekly trades as time goes on, or we keep it around 3 to 4, Corey? I don't know. The service is going so well right now. We just went to 4 last week, and then I don't want people to ever feel left out. So I don't know. We started with 2, then we went to 3. Last week we did 4. Market conditions will affect what we do. We could be back to 3 or 2 this week. But we'll try to keep it reasonable, and we try to cater to the, what we said is the recommended account size. When you make a trade, the terms credit or debit are shown in the price window. I've not been able to figure out which is what and what the true meaning is. Thanks. Todd?
Okay. Debit is when you're buying an option, and when you take a debit position, your potential risk reward is, your risk is limited to the debit amount, and your reward is unlimited. On a credit, you only can collect the amount of credit. And what we're doing is we are selling credit. That's what we do. That's what, we're the insurance man. We're the house in Las Vegas, however you want to call it. We're collecting that credit because based on our tables, we are going to collect a lot more credit than we are going to lose over time. So we're collecting the credit, which gives us a limited reward model, but it's a consistent reward on a regular basis. And we are not, when you're doing a credit position, time is on your side, and because we're doing weekly options, we want the clock to tick as fast as possible. But you're going to be doing credit positions in this particular strategy, except when you get the credit spreads, then there's 2 positions, 1 debit, 1 credit, but the net of our trades will always result in a net credit coming into your account.
Do you ever roll the trades into the next week? Well, is it rolling it when we do the same trade again, or no? That's something else.
Yeah, but I think what the question is asking is, if it's going against you, do we roll? And the answer is no.
No, never average out. But like Verizon, we did 2 weeks in a row, so we'll do the same trade. We'll hit the same trade, but no, we're not doing that. How much money do you need in your account in order to do all the contracts you recommend weekly? Try to keep it around $15,000. Sometimes, again, if you guys are calling for more trades, we try to cater to that, but we go in order. So to do the first 3, it will usually be around $50,000. Do you then need additional money in your account in order to then do the next week's contracts before the previous week's contracts have expired? Good point. Yeah. Because we do it every Thursday. Well, what people were doing last week is because they were so close to being done, they were just taking the trades off. And I believe, I know for Thinkorswim we said if it's under 5 cents, then you don't even have to pay commission. My broker-dealer qualifies the level of options you can trade. How can I get around that? Todd?
Your broker-dealer qualify. I need a little bit more information. Who is your broker-dealer? And
Deborah, just
what
shoot Todd an email. He'll answer you after the call. Todd at AdamMesh.com.
Todd at AdamMesh.com, yes.
David, will you save this recording to the own site so I can go back and study it later? Some of this I need to review again. Yeah, it's a good idea. We'll put it up on the site for sure. Okay, so I think we've gone through. Tom, can you send an email just to contact you in the chat window?
Yeah.
Yeah.
I'm going to put it in for everybody. If anybody needs any questions, you can go ahead and email me directly. I'll just put it into everybody. I'm going to type it in the chat box right now.
All right, Todd's putting it in. And Todd, I'm going to give you the controls now, so you can take everyone through credit spreads.
Okay.
I will say one more thing as we're making the switch. If anyone wants to meet Todd and I live, we are doing a live event in Las Vegas, April 23rd to 25th. I know a couple people jumped on board. We'll be covering this. We'll also be going over some other trading strategies, having meals. It's already gotten a lot of attention. You guys are just meeting us. If you're around the area or you want to fly in and hang with us for a couple days, do some live trading. on the 24th and the 25th, you can send an email to Stephanie in my office to get more information. Todd, did you take the controls?
I did.
Okay.
I did. I'm getting ready.
Can I still send out Stephanie's email, JJ?
Yes, you can. You should be able to. If not, I'll put it up there for you.
I got it. So email Stephanie at adammesh.com if you're interested in that. Okay, great. And Todd's going to take us through. We're going to go on Option Monster and Thinkorswim for credit spreads. We just want you to see the different screens so you can feel comfortable with this.
Okay, I'm going to actually, let me get up everything I need now. So I need, I have this, and I want to get up the, okay, let's see here. Trade Monster and the 17 trades. Okay, all right, so now, this is Trade Monster's platform. And one of the nice things about Trade Monster, and I haven't used it actively, but I do understand it. When you're on Trade Monster, so let's use Verizon since that's a stock that we use on a regular basis. Verizon. So up comes the price ladder or the options chain, and I prefer the chain because I like to see all the other options. But so all you do is, so if we were going to make a trade in Verizon right now, let's say we were going to sell the 46 put. All I would do is go over here to the 46. I would just click this green button, and it would bring me up a trade window. And what it's telling me is that the 46 put for, actually this is a March, but let me go to the weekly. I'm sorry, let me just change it. The 46 put for this week is trading, it's 32 cents bid, it's asked 35. So I can either just sell it at the market or I can change the price. So what we basically do is we basically just hit the market because we're not interested in trying to quibble over pennies because we don't want to miss the trade. But simply all you have to do is go ahead and click sell. It'll bring up a window confirming. The action is sell, the quantity, how many contracts you want to do. Then you put in the price that you want. If you want to change the price, you can. Here's the bid and offer. There's a sliding scale. A lot of people like to go what they call the midpoint. And then, you know, you just simply hit confirm and the trade is made. Now, it won't make it now because it's telling you, but it does also send up a flash and tell you this is the trade you're making. Are you sure? And then you send it. Okay? And that's exactly a Trade Monster screen. Now, Trade Monster also, if we are doing credit spreads, you do the same. You go through the same action, click the spread, and on the corner here it says Create Spread. You go to the Create Spread, and we want to create a vertical spread. Here's all kinds of different strategies. We just want to create a vertical because what we are doing is basically a vertical. So we're going to create a vertical spread, and it's going to load in the different spreads. So here it's showing the strikes. This expiration date is February 20th, this Friday. Here's the different strikes you can go in. Now, we don't usually do, with a lot of these options that have 50-cent wide markets, what we do is we go to like a 2, okay? And this will change it. So this is the 46.47. Well, right now, with the stock at 46, I would be trying to sell the 46.45. And all I have to do is open this window, go to my slider, and look at the 46.45. And this will bring up the mark. So right now, that spread is trading at 25.5 cents. I go through the same exact process. I go to sell. Here's the number of contracts. It's sell, so it's in red. I put the number of spreads I want to put on, the price I want to put them on at, and we will give you all that information when we're doing it. And all I have to do is hit confirm, and it will bring up, I want to sell 3 February the 28th, expiring the 28th, 45.46 put vertical spreads. I'm collecting at 23-cent credit, and here's how it breaks down. I'm selling the 46 put in red. I'm buying the 45 put in green. One's a debit, one's a credit, creates a net credit to the trade, and all I have to do is hit send, and it will send the order in. Okay? And that's exactly the way that you use this particular platform. It's very simple, one click. You click the option you want to trade, and then you make the decision of how you want to trade it. Very, very simple and easy and light and easy to deal with, as is Thinkorswim. Thinkorswim is the same type of platform, except on Thinkorswim, what you do here is you go to the option that you want to trade, and you're going to right-click on the thing, and it gives you the options, buy, sell. So right now, we're just worrying about buying or selling, so we're going to sell, and the menu's going to pop up, we're going to go to sell vertical. We're going to go ahead and click that sell vertical, and look what happens down below. Now we have vertical, sell, number of contracts, so let's say we wanted to do 3. We would just hit our scroll bar. The symbol is Verizon. Okay, now we want the strike. So we just did the 46.45 on TradeMonster. Here's the 46.45. Here is the price. This is the midpoint right now. Okay, now the market is closed, but this is the midpoint, is the price. I can do it limit. I can do it market. Now on spreads, I would recommend you do limit, because when you're dealing with more options, there's more things that go on. So it's easier to do it limit, and if you do it at the mid, 99% of the time you're going to get filled almost immediately. And all you do is you do the same thing here. You hit confirm and send. This brings up a window. Sell 3 Verizon 100 weeklies, February 46.45 put at 25-cent limit. My break even on the stock is 45.75. My max profit is $75. My max loss is $225. The cost of trade, including commissions, is $75 minus $450, so I'm looking to collect $70.50, and this just gives you a result of buying power and everything else that goes to your account, and then you simply hit send, and the order is created. If you just want to sell a naked, you simply go to sell, single, and here it is. I'm going to sell the 46 put, 32 cents. I hit confirm, same window pops up. And that's all there is to do. It's very, very simple, very easy, very, very user-friendly. When you learn how to use these options chains, you get to look at everything, and you don't have to worry about, some of the platforms. I know Scottrade makes you know all of the fancy symbols, which are extremely long. On the 3 that we've looked at, simply you pop in the number, and boom, it's there for you. It's ready to go, and it's easy. And you click it. You click and go, basically. It can be done in a matter of minutes. Let me see if there was a couple of other questions that were.
Hey, Todd, I just wanted to answer one. There was one, I misread it for a second. But Doug said, when doing the credit spreads, does it make sense to do more contracts to offset the lower credit? Now, I was thinking just regular trades. But he's saying if you're doing a credit spread, does it make sense to do an extra contract?
You can, but typically what I'm going to do is I'm going to make the credit that we collect on the spread. Usually the credit we collect on the spread is very close to the credit we collect on the naked, because I'll make the adjustment in the strike price where we're going to go. So I would say no, because really what you're doing is you are increasing your risk factor. So I'd rather you stay within the 3 contracts. Now, if you get good at it and you're comfortable, absolutely you can do more. But I would, I'm going to make the spreads pretty close. I'd usually within a couple of percentage points of what we're collecting on the naked put as well. So, sometimes they have to go a little bit closer than we normally go, but overall it works out very well. And while you're getting used to it and while you're learning it, it's better to stay with the recommended amounts until we get good. When you get comfortable, you want to do more, please do more. I mean, I'll do, sometimes I'll do 50 credit spreads. It just, you got to be comfortable with what you're doing, and once you have a good understanding and you understand the execution and you've been through a couple of expirations, if you feel comfortable, then you can add to your positions.
Okay, I'm sorry. So did we cover on both screens?
Yes.
Okay, cool.
We did. Does everybody have any questions on either one of the screens?
And now if you do, let me. Did we answer everything?
How about using Charles Schwab? I actually have Schwab too. I don't have it on this computer, so I can't show it. But if you use the Street Smart Edge program, they also have single click on Charles Schwab. It's very simple, and they're very, very accommodating at Schwab. They'll be happy to walk you through it. But Street Smart Edge has a very similar platform to TradeMonster and to Thinkorswim, so it's very easily to use there.
Okay. So guys, listen. Todd, looks like your commission charge in TOS is $75 per contract. How did you get that low of a commission? Very observant, Jay. He's a superstar trader. They want to. If they could pay him to be on their platform, they'd pay him to be on that platform. but if you want, email Todd, let him know, like, you know, what you're paying, we'll see what we can do. But guys, you know, the bottom line is this thing was, out of all the things we did, this was the one that was by accident. Todd taught it to me. I was doing it. I fell in love with it. We're like, let's create a service. And since then, it's just been like the greatest retention rate I've ever seen. So this call was just to make sure you guys feel comfortable using it and you can get all your questions out of the way. But what we'll continue to do on every call, the next one's Thursday at 2:30, is say, does everyone understand? Do you understand why we did this? And make sure it makes sense to you. I realize that to put a trade on now, who knows what's going to happen overnight in the 16,200 level. It doesn't make sense to do it right now because 16,200 is the key level I'm watching. We closed just below it. So I really want to see where we go tomorrow based on that. So I guess we'll just wait until Thursday. That wasn't a trade. I really want to do one. And I was like, market's closed. So much can change by tomorrow. It doesn't make sense. You know, for your individual accounts, you could email Todd. We'll do the best we can to help you. But what we're going to most importantly do is just kind of keep making the trades, keep doing well, keep communicating with you. What we found is if you understand why you're making the trade, then you're going to love it. Okay? And the main question seems to be it's about buying power. Okay? If you want to go bigger, my advice is start with what we're recommending, get comfortable with it before you go bigger. If you can't go as big as we can go, do less trades. I have people in my office with smaller trading accounts, and they'll do the first two, and maybe they won't do the next two. Or they'll do the credit spreads. And they're still having success, and that's a fun thing to try to build up the account and get it to the point where you could do every trade. We do go in order. We do go in order, and I'll always rank, you know, this is my favorite. I like this. So we'll try to make it as clear as possible, and we try to make it so that you could do it even with the smaller accounts as a credit spread. And as long as it keeps doing like it's doing or even close to it, I assume you guys will be happy and with us for a long time to come. So thank you for joining us. Todd, you're awesome as always. Todd's the one who taught me the system. You see the way I defer to him for a lot of the questions. Just he knows the stuff the way I know stocks like the back of his hand. Again, most of these stocks are stocks that I would trade, and the only ones I wouldn't trade are maybe because I was like, I don't think they're going to go up that much. I just think they're just going to stay there, which is an even better way to sell the put because, you know, it's just, I know for one thing it's not going to move, and we can take advantage of that. So we're a good team, and enjoy Thursday, and we look forward to working with you for years to come and making money together. Okay?
And one quick thing before you go, Adam. Just if anybody has any questions, there's a lot of questions rolling in, and we could be here for, you know, for a long time answering. Any questions you have, you can email me direct at Todd@Adamesh. I'll answer each individual question for you. I'll get you done. I'll get you set up because obviously there's a lot of questions and there's a lot of repeats. So if you have a question, feel free to email me, Todd@Adamesh.com. Go ahead.
Is there any new ones we haven't answered yet or no?
Well, there's a Merrill Lynch I'm not familiar with, but I'm sure it's fine.
Okay, that was what I wanted to make sure I wasn't missing any.
Do you recommend calls and straddles? No, we don't. And that's not this strategy. This is a basic, simple strategy. So any other questions you have, please feel free to email me. I'm more than happy to take the time to answer each and every one of them. I love this. I love options. I love this part of the business, and certainly the ATM that Adam has built here with Options and Money Machine is certainly. I'm loving this, and I've done it for 35 years. So you can tell that I probably enjoy what I'm doing here.
All right. Awesome. Thanks, Todd. You're the man. Thank you, everybody. Great call. Great participation. Thanks for coming with your questions, and we'll put this up on the site so you could ask questions if you need anything. All right?
Have a great day, everybody. If you need me, email. Thanks.
All right. Bye. Bye, Jay. Bye, everyone.